Good afternoon, guys. It's Workin, bringing you a quick update on Bitcoin. Hope you guys are having a wonderful afternoon. We're looking at Bitcoin to the US dollars as the 4-hour chart on Coinbase. And last time we spoke, guys, yesterday we spoke, I told you guys, let me zoom in here so you guys can see a little better. I told you guys price was being condensed inside this little wedge here, a series of lower highs. Pardon me, slightly higher lows, not much, came more of a bang, more of a descending triangle, which is typically a bearish pattern, guys, but this was not a, we had these wicks down here. We could see that price was getting bottomed up every time it tried to, getting bought up, I should say, every time it tried to break below 3,600. We had this wick here, wick here, wick here, wick here. So tell me there was a, told me there was a lot of buyers down here. This 3,600 support held much better than I expected. Remember when price was back here, I was telling you we were seeing a lot of weakness. We were like catching a falling knife. You never want to go in and try to catch it. That knife finally found a spot to plant itself, at least temporarily. And of course, I told you guys yesterday, pardon me, that we were seeing a little bit of bullish momentum. I told you if we could break above this 3,800 decisively, that'd be a very bullish sign. The next step was going to be this zone here. And we have finally broken above this 4,150 to $4,000 zone. I told you that $4,000 was extremely critical, guys, that we were able to break up above it decisively. As of now, it looks like there's a good chance that we're going to. We're looking at the 4-hour chart now. If this 4-hour candle is able to close above this 4,150 zone here, guys, I'm going to start to get a lot more bullish. Doesn't mean the bottom is in quite yet, but it could be. That's certainly a possibility and certainly something to consider at this point. What I'm liking here and what I want to continue to see, obviously this 4-hour candle needs to close up here. At that point, we'd have a 4-hour candle that both opened and closed above this zone here, and I believe that's a critical zone. But what we're seeing that I'm liking is we're seeing a little bit of a pullback, and every time we see a little bit of a pullback, we see the buyers buy that right back up. We saw that, pardon me, we saw that a little bit here when price pulled back, came right back up. We saw it a little bit here, price pulled back, right back up. Of course, it started down here. Pull back, price back up, pull back, back up, pull back, pull back, pull back. So this is very bullish. So what we're going to see is I'm going to want to see price obviously stay above this 4,150. That's going to be critical. Next zone that we're going to be watching is this 4,400 to 4,315. This zone right up here, this looks like a much stronger resistance than this was down here. So I'm going to be very interested to see if we get a very strong reaction, a very strong bounce at this zone, and then coming back down to test this zone. Of course, it'll be very telling if we do come back down to test this zone. It'll be very telling to see how price reacts if and when that does happen. But what I'm watching here, guys, and I found this interesting, if I go swing high, swing low, and pull our fib, what do we have here? We're seeing that price pretty much, since our swing low right down here, price has been respecting these Fibonacci levels pretty, at least the body has been respecting these Fibonacci levels fairly well. Price came back down, came up. We got the body hitting almost perfectly. We had a little wick through, but looking at the body almost perfectly right off that 236, rejected off the 236, came back down for a retest of support. Support held, came back up, support held again, busted out of this this triangle here, this little wedge pattern here, came back up, decisively broke back up above the 236 fib level, came down for a retest, bounced off that 236 on the retest, and then bounced right above that 4,150. So that is a very bullish sign, guys. The next stop, we can see how this the 382 fib level lines up perfectly with our bottom. And remember, I drew this zone a couple days back. Lines up perfectly with this with what is currently resistance right at that $4,315 range, guys. That is that resistance. If we can bust above this Fibonacci level, this 382 fib level by decisively, in other words, not by a wick, but if we can get a 4-hour candle opening and closing above that 382 fib level, which sits almost perfectly at that $4,315 resistance, if that does happen, guys, and then we get a retest and what was resistance starts acting as support again, it's going to be an extremely bullish sign. We can see looking at the 50 fib level here. What does that coincide nicely with? In fact, I'm going to go ahead and mark it right on the chart. That coincides very nicely, looking right here, coincides very nicely with what was a resistance area. We can see that resistance right here. Actually, it even started right back here. Price came back down, bounced off it, and then finally broke below it, but started as resistance right back here. So we can see that was a resistance, or excuse me, that was support here. Sorry, guys, support here, then acted as resistance, back down. Now we had this brief break back through again, but of course it acted as resistance here, resistance here, resistance here, resistance here, resistance here, and then broke down. So that's definitely a logical area to expect another resistance, and of course it lines up perfectly with that 50 fib level. And if we can break above that, guys, just going to be another sign that the bulls really are starting to get their act together. If we come over here and we look at our volume is starting to tick up almost at 7 billion for the day. That is a decent hike. And really what I believe is going to be the real tell-all, and I will start to believe, in fact, I will start calling a bottom is in if we can break above the 618 fib level. Of course, we know that is the golden ratio. If we can get above that 618 fib level decisively, which again, guys, that 618 fib, it's no coincidence that lines up perfectly with that resistance level, that order block back here that I had drew quite a few days ago. Actually, I drew this on November the 20th. So what was that? A little over a week ago now. And of course, that lined up perfectly with that 618 fib level. So that sits at about $4,750, or excuse me, $4,835 is where that 618 fib level is. So if we can really, this is going to be every single layer that we break above on this, guys, is another sign that is another sign closer to declaring a bottom being in. If we break above that 618 fib level, guys, I do believe that algos are going to change. Remember, a lot of algorithms are changing this. You're not just trading against people on the other end right now. You're trading against algos, and algos are smart. But they're very smart and they're very dumb. In other words, it's whatever they put in. Data in, data out. That's all it is. So we know that that many algos are watching this as a swing high. That being said, we also know that many algos use the 618 fib as a absolute 100% pivot point to either go long or go short. So until we break above that 618 fib, they're expecting this to bounce and come back down. That's how they're kind of playing it. They're playing a bounce off the top. They're selling up here, buying up down here, and they're just going to continue to do that. Once we break up above this, guys, once this breaks above, most of them are going to shift, and they're going to start going, and a lot of them are going to start going long. And so this really is a key level here at the 618 fib level, that $4,835 support, that pivot area that we saw right here. And really, this was the first this was the first structure that was created since we had broken down out of this zone. Now, of course, we broke down very decisively up here, but really all eyes were on the bottom of this zone here, that 5,500 zone here. Remember, when this broke down, everyone was kind of watching this as kind of the last stand to see where this ended up breaking. And then, of course, when it did break down, it broke down with a vengeance, as we saw. But once it did break down out of here, this was really the first time the market made any kind of structure right here. And so I do believe that this is a very relevant zone. If we can get above it decisively, break above this, and then come back down for a retest, and we get a bounce, that's when you're going to want to go in rather heavy on that bounce right here. Until that does happen, guys, we're going to be very, very cautiously optimistic. Of course, dollar cost averaging in, very slow, not heavy at all. And of course, if you're uncomfortable with this market, just wait. Just sit on the sidelines. As I always tell you, sit on the sidelines and wait for that trend to be established. There's going to be a lot of money to make going forward. You do not have to try to catch the bottom here, guys. You really don't. There's plenty of money to be made going forward here. Now, we do have, there has been some talk of ETFs being delayed, ETF approval being delayed. There was, I can't remember the guy's name from the SEC, came out yesterday, basically said the oversight in place was not sufficient enough for him to be comfortable approving an ETF. Of course, that doesn't mean for sure that an ETF won't be approved in the short term, but it certainly was not a good sign. That being said, what is a good sign is that we are still getting buyers coming in, even with that kind of news, And I do believe that was just him more flapping off at the mouth, guys. I honestly believe that ETFs will be here by the end of the first quarter of 2019. I do believe that. I do believe that's the case, guys. I really do. Institutional money is scratching at the bit to get in, and I really do believe that that the SEC is going to approve some form of ETF by the end of the end of the first quarter of 2019. I don't have any proof on that, guys. I just know that institutional money is without question trying to get in, and I know a lot of smart money has been buying over the counter really since this drop here. I think they've been happen if you watch over-the-counter purchases, which means it's not showing up on the exchanges. They're trying to do this to manipulate or to slowly get in. They wanted to. And remember, we were talking about this when price was up here. We were talking about institutional money to wanting to get in, and we told you that they wanted to get in at a lower price. And of course, this is that lower price where they're getting in. Now, could it come lower? Absolutely. I'm still watching that $3,000 level, guys. I still believe $3,000 is a very real possibility. That being said, we are seeing some short-term bullish momentum, and all we can do is wait and see how this how this ends up playing out. If you want to buy the retest on some of these guys and do quick scalp trades here and there, if you're a day trader, by all means, come back down. Price comes up here, comes back down, test this area. You want to buy it up here, sell it back up here. Little scalp trades, that certainly does make sense, guys. But if you are not a experienced day trader, scalp trader, or swing trader, I would just sit on the sidelines and wait for that established trend. And then if anything is dollar cost averaging in very slowly into a position would make sense here. As I talk about all the time, guys, deploying a little bit of fiat at each one of these support levels certainly does make sense. Just make sure you're not going in heavy. Looking at our short positions, guys, remember this is going to be key to watch this. This is shorts. Shorts are now sitting again about 15-20% outpacing longs by about 15-20%, somewhere thereabouts, guys. Flirting with all-time highs at shorts. We have all-time highs up here. We're not there yet, but we're not that far away either from all-time highs. So of course, this tells me that market makers still have a lot of incentive to bring price up. Where are the stop losses on these shorts located? I believe that a lot of these stop losses on these shorts, let me get rid of that. I believe a lot of stop losses on these shorts are located right here. Why do I say right here? Well, if we look at this area, this is where a lot of people entered into their short positions. We can see this was on the market created structure right here on November the 19th at about about November. We created structure on November the 20th, right in November, midnight Zulu time on November the 20th. We come over here and look at short positions. We go back to November the 20th. What do we have right here? November the 20th. What happened right at that point, guys? We can see that shorts just spiked right there. So that's why I say right here more than likely is where they entered their short positions. So more than likely their stop losses are going to be sitting right behind this wick, somewhere thereabouts, guys. So that's going to be at about $5,000 is where their stop losses are very likely sitting. So market makers really would have to drive price up to this area to take out a lot of those short positions. Now, not all, certainly not all. A lot of short positions are entered into right here, which means that their stop losses are probably sitting somewhere around this 50. So really this 50 is going to be this 50 fib level, the 0.5 fib level here, which sits at about $4,570. That's going to be another key area as well. If we can get above this zone here, decisively, I do believe there's a very good chance we're going to take out the 618 fib level. I say that because there's a good chance we're going to get a reaction at this area back to the downside. As I said, guys, because I do believe a lot of their excuse me, a lot of short positions will be taken out at this point. A lot of long positions will very likely be being added. And once that happens, what do market makers want to do? It's a zero-sum game, as I always tell you. If someone to make money, someone has to lose money. This is where they would probably institute that bull trap. Everyone thinks it's going long. Everyone thinks that's it. This is it. And they reverse it right there. This would be a logical area to do it because everybody's watching that 618 fib level and expecting a reversal, a bounce off that area there. And that may happen. That certainly may happen. But it would make more sense, especially if shorts get knocked off the board here and long positions continue to stack here. Then then this is the area I would think market makers would turn price right back around and bring it right back down, right there at that 50. So again, if we can break above that 50, I think that the probability is going to be in favor that we're going to break out above this 618 fib level. Of course, nothing is a guarantee. All we can do is watch and wait, but these are the key areas that you want to keep an eye on, guys, without question. So I'm going to go ahead and wrap things there. If you have any comments, questions, suggestions, please let me know in the comment section below. As always, would appreciate an upvote if you have enjoyed this content. Until next time, guys, please trade safe, take care of yourselves. This is Workin, signing out.